Hey guys, welcome back. Patrick here. This video is going to be a little bit more controversial. Some of you are very sensitive and do not like when I talk negatively about SPACs, but the fact is I'm an investor. My job is to look at what's going on in the market and react accordingly. Right? The goal in the end is to make profits no matter what situation we're in. We are in a very, very difficult situation right now when it comes to SPACs. So we all know that when the prices are going down, we should be buying, right? You want to build your positions so that eventually you can sell high after you bought low rather than do the opposite. But the big problem that we're having right now, pretty much everyone that's a SPAC investor, is that they've been bleeding for 6 months and they keep on bleeding more and more and more. So it's not just a dip, right? They continue to go down and down and down. So most of us are pretty much running out of cash. So I've been asking this question on the community posts. I got a lot of answers. Are SPACs done for 2021? We just had a lot of earnings and they were not pretty. I mean, a lot of our SPACs got absolutely demolished, and the guidance for the rest of the year are also very, very bad. So in this video, I'm going to show you what's going on in the market and, more importantly, how I've been doing. You guys know that I've been betting against some of these SPACs. I made a video 2 weeks ago that got horrible comments. Everyone was against me in this video, right? Saying that it was a mistake and, I shouldn't be doing that and all of that. Very, very negative, even though the 3 picks that I mentioned, we got 100% success rates. And in this video, I'm going to show you 2 more that I'm actually betting against right now. And I'm already up almost 100% on them. All right, so let's get started. I'm sorry, this is more of a negative video once again, but I'm here to tell you what's really going on, not pretend that everything is rosy with SPACs. Alright guys, we can't start looking at SPACs without first taking a quick look at the Russell 2000. This is the index that represents SPACs much better than the Dow, NASDAQ, or the S&P 500, because a lot of our SPACs are small cap stocks that usually don't have a lot of positive free cash flow, right? So this one, I've talked about it before. It has been stuck in a channel since February, and we are not anywhere close to the upper bracket, right? We've been going up and down the entire time. Often we're seeing these crashes and then it kind of rebounds, but overall it's been stuck in this channel for a little bit more than 6 months now. Well, look at what happened recently. I remember this was at the end of last month. There was a fairly big crash. It was a pretty painful day. And then all of a sudden, SPACs and small retail stocks start to recover. And it looked like we were doing fairly well. Just Tattooed Chef went up to $22 and all of SPACs were recovering. Sofi was at 17 again. Everything looked like it was doing really well. And if you guys notice, we had that cross on MACD right here. But look at what happened a couple days ago. We started to see a lot of weakness, and now the weakness is just accelerating. Look at how we had another cross. It is fairly small for you guys, but look at how it is crossing again, and this is very negative. Today we went right through that 2190 support. Not the strongest support, but still, it's not a very positive indicator. And then the next support is going to be around 2100, and that one is very, very critical, because if you look at the chart, look at how we hit it here, 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 and here. So it is a very, very important support for our stocks. If it goes under 21, I'm going to be scared. I'm going to start crying probably, because where else are we going to go? Are we going to go back to November levels at around 1500 when everyone was panicking about the elections? That is a lot of gains that we can lose if we go under 2100. So I'm just letting you know ahead of time. So when we're looking at how the SPACs are going to do for the rest of the year, that is the first thing we need to look at. Right now, the entire market is pulling down. And then when you compound that with the earnings that we had recently and the lack of real positive catalysts, well, we're in for potentially a lot of trouble in the coming months. Of course, I could be wrong. I hope I'm wrong. But in the short term, the risk versus reward is not great for us. Let's do a quick rundown of what happened in the past week where a lot of companies had their earnings. Well, the first one that really struck out was Catapult, which their revenues were down slightly since last year, but the stock has been absolutely punished It had been in a nice little uptrend recently. It had gone up to almost $10 again. And then it literally crashed overnight to the low fours. And now it's sitting at 340. So I opened a small position on this one. My thought was, usually when we see such a bad beat where the stock loses over 50% of its value, as long as the company is not susceptible to go bankrupt, often it is going to actually start to rally a little bit. Well, this one so far has not rallied. Now, I expect that in the next few months, we are going to see the stock go back up. Like today, it's up 7%. That's pretty nice to see. But overall, it has been really struggling, and that was just the beginning. After that, we had a lot of other companies. Yesterday, we had PaySafe that, look at how it actually went down a cliff like some of the other ones. I had my cash secured put at $11. I closed that one on Friday because I didn't want to hold it through the earnings, and thank goodness I did that. I took a small loss of $140, but it would have been way worse if I had held it through the earnings. Now, keep in mind, PaySafe is not a startup with no revenues. This is an established company that's been around for 20 years and is worldwide, basically, right? And payment processing is usually a fairly good industry. I remember on CNBC, I think Grasso is his name, he kept talking about PaySafe and how his price target was $30 and everything. So if you're kind of wondering what the heck is going on with this company, you're not the only one. Everyone is baffled at just how beat down they are. Well, my answer to that is right now, cue the Britney Spears music, SPACs are toxic. Right, so for us to get a recovery, we need buyers, and there are simply no buyers willing to buy right now because they're not sure that their 850 is going to still be 850 tomorrow. It might be 750. All right, so that's PaySafe. That one has been down. Tattoo Chef had gone to 22, and now it's sitting under $16. All right, the company didn't have a stellar quarter, but it wasn't horrible either. They increased their margin by 5%. So this is another company that I still have faith in them. I'm still going to be holding it. But in the short term, it is really, really painful. I lost a decent amount of money in the past few days with this one. Still love it long term, but in the short term, it's hurting. Sofi, I looked through the earnings, didn't see anything negative. We knew about the one-time warrant expenses. He had to remove the guidance a little bit with the student loan refinancing because right now they don't have to pay their loans, so they're not refinancing. But does anyone really think that the long-term prospects of Sofi are with loan refinancing, with student loans, or is it with their technology platform, with their lending and all of that? Of course, it's the latter, not the student loan refinancing. So for the company to go from $17.50 down to $13.74, is really, really brutal. Now we even have the actual warrants are going to become exercisable in early October that are going to put even more selling pressure on the stock. So that's another one where you want to buy more, but you're worried that if you buy more, you're going to get punished again, right? So everyone is going to be in a wait and see mode. Let's go through one more. Play Studios. This one has gotten beat up since they began, but it got even worse after the earnings, where it went from like mid fives down to 429 right now. It's just losing 9-10% every single day, even though, again, the company is not catastrophic. You know, their revenues went down 10%, not 50 or 60%. So that is completely overreacting. But what are going to be the catalysts in the next 3 months? Until the next quarter, when they have their next earnings. Nothing really. The third quarter is going to be exactly like the same one we just had. Not just for Play Studios, but for Sofi, Tattooed Chef. Maybe they're going to be a little bit better, but are they going to be so much better that people are going to be extremely enthusiastic about them? That's where I'm not sure, right? And that's why I'm not sure we're going to see a big recovery in 2021. And it hurts to say that, right? Because I believe in them long term, but in the short term, what's going to turn this around? If everyone is negative about them, even big SPAC investors, my own viewers, vote on the poll, and at least 50% of them say that they're done for the year, well, who's going to be buying into them, right? Even if the prices are low, you need buyers to actually bid them off if we want a recovery. Now, Lighting Motors, this one is... what can we say about this one? It had been down a lot, right? It went down to the 6s, I believe, for a while. And then we had that massive spike when they announced that $850 million contract. So I wasn't sure what to do, but I sold my warrants. And my thought process was, well, in a couple of days, they're going to be out of the spotlight, and I wouldn't be surprised if we see $8 again. Again, I thought that would be a few weeks, not a couple of days. Now it's under $8, the warrants are crashing, and it's a complete disaster. Yesterday they had their earnings, and these are the words that totally kills the stock. Lightning is withdrawing its prior guidance for the 2021 year, although the company no longer expects to meet full year guidance. Those words are going to kill the stock. Not permanently, right? But for the next couple of months, what can potentially help the stock recover until next earnings? They have to smash the next earnings. And in those 3 months, nothing's really going to happen with the stock. It's probably going to keep drifting lower and lower and lower. Very, very unfortunate, but that's the truth. So last but not least, this is my SPAC tracker. Right now I have 49 that I'm tracking. Look at the average for today. Down 4.43% for all the 49 SPACs that I'm, X-SPACs rather, that I'm tracking. Only 7 are up, 42 are down. But what's worse is yesterday the average was also 5%. That means on average, these 50 stocks, 49 stocks, dropped 10% in 2 days. Look at this, 26% by Sunlight Financial. So it's not a good time to be a SPAC investor, unfortunately. But you know what's really a good time? Is to actually be making money with puts. Unfortunately, it's the sad reality. Now let me show you. So with all this said, what am I doing about it since I'm bearish on them for the next few months? Well, 2 weeks ago, I literally told you guys exactly what my game plan is. And the goal here is not to claim that I'm right and gloat about it. It's just for you guys to like finally realize that the market doesn't want SPACs right now. What else do you want me to say? I mean, they are toxic. So 3 SPACs about to fail. I've got a lot of comments negative about Microvast and how I was going to be losing all of my money, shorting it, even though I was long Microvast. I wanted it to be successful, but I sold my shares because it was losing all of its momentum. Well, they were making fun of me, right? When it went up to $13, but now, just like all of them, it is back to $8.97, under $10 what they IPO'd at, right? So that's the state of the SPACs right now, and I don't see it changing in the next few months. So personally, I'm just going to be holding and shorting some of them. So JOBY is one of the 3 that I actually talked about. Got a lot of negative comments about that one too. This one, they are trying really, really hard to prop it up. This morning, when it opened, right, it went up to $11.50. So there was a very, very big purchase, maybe from Cathie Woods. I'm not sure. She has been in the stock before, maybe from one of the other big investors. But look at what happened the rest of the day. The stock has been crashing over and over again. To the low of the day, it reached $9. Or I think the low point of the day was $8.90. Right? So the first day, it did go up. I mean, they were in front of the New York Stock Exchange. They had the little helicopter. They interviewed. They were interviewed on CNBC all day. I literally was looking at the chart, and the stock went from $12.50 to $13.50 in a couple of minutes while they were talking on TV. But now, times are different. They're no longer in the spotlight, and institutions are going to be shorting the stock, which plays into my hand. So I made a little bit of money on this one. We were still testing out the strategy, so $1,400. The expiration was coming pretty soon, so I didn't want to take too many risks. I sold this one fairly early, and now I have a bunch of contracts for next month. Those are doing really, really well already. Then the other stock that we looked at in that video was Momentus. Again, you know, yeah, it's recovering today, but overall it went down to $8.81, and when you compound that with options, you are going to get very, very large results, right? Profits. So this one, I only had 20 contracts. Again, still testing the strategy at the time, so made $500 on this one in a couple of days. And then the last one was Otonomo. This one's down to $8.31 right now. Another loss of 10% today. Since my contracts were expiring Friday, I closed this one, and it's showing up as 1,200 gain. It's a little bit lower than that because it doesn't show the cost basis, right? But we've been profitable on 3 out of 3. Now let me show you the ones I'm working on right now. All right, so on the Patreon, we're working on many of them, but in this video, I'm going to show you 2 of them that I already opened position, so you can't like undercut me or anything. If you guys want to look up the Patreon, we've been doing really well. As I mentioned, like we've had a lot of success in the past month, aside from the SPACs that we hold, right? Those are not doing well, but all sorts of option plays have been doing really, really well. The first one is NGAC. This is going to be merging with XOS Trucks that does hydrogen powered trucks, kind of like Nikola. And look at what happened. As soon as the floor is gone, the company starts tanking. So 866 already, it's just been a few days. And even though the company has had some pretty good announcements recently, FedEx ground operators order 120 XOS trucks, doesn't matter. People do not want to buy them. So as long as there's no buyers, the share price of these SPACs are going to fall. So that's why I don't expect any recovery in the next couple of months, right? Some of them will recover, but if we're looking at like the vast majority of them, then it's not looking really, really good. So right now, this is why the strategy is working. So one of their, not really competitors, but another electric vehicle SPAC that came out recently was ELMS, Electric Last Mile Solutions, a pure electric vehicle company, and it's sitting at 792, right? So that's one of the things that made me think that NGAC was going to be one of the good candidates. Now, there might be a little bump when the ticker changes. I'm not quite sure about that, but where's it going to go, right? We see the tendency, the pattern is for them to drop. So I'm already up on this one. I have 50 contracts expiring in September, so I'm up $850 on this one. We'll see what it does, right? This today was pretty good, up 625, and as long as it drops, I'm going to keep making pretty good profits on them. So if the share price spikes, in the short term, my profit's going to drop, but then I have 1 month left, right? So we see the pattern here. They keep dropping after the ticker changes, so I have plenty of time for it to keep going down. Again, I have to repeat it one last time. I want these companies to succeed long term, but in the short term, we're playing what we are seeing in reality, which is the share prices are falling, and that does not have an impact on the company's future success. This is like market forces. It's not anything that really affects the company in its day-to-day operations. I hope that I made that clear enough for those of you that are upset about us playing against SPACs. All right, so the other one is SOAC, which is going to be merging with Deep Green. This one is still fairly close to $10. I went fairly big on this one, so if you guys want to like play against me, well, I own 10% of the contracts that are open currently, the 750 puts on this company next month. So you can track my results. If the stock goes up in the next month, you'll see that I'm probably down in this stock, but I like my chances. So this one, it shows I'm down 602. That's not really accurate. It's because of the bid and ask. The bid is 10 cents and the ask is 15 cents. So SOAC, September 17th, 750. That's how I'm going to be doing it. I have 200 contracts of this one. So I expect to make pretty good profits. All right, so if we wrap up the video, we're not doing too well with SPACs. I have the support group for SPAC investors. Right, our long positions are hurting, but all of our puts and covered calls are doing well. So personally, the way I'm actually playing this, let me change the camera. Usually when I like have my portfolio, I prefer focusing on the options. And what I mean by that is the shares are going to recover over time. We know that a lot of these companies are decent, right? They have revenues, they have products, and they will recover next year or the year after. It's just a matter of time. With options, though, you're time limited. You have an expiration date. So that's why, as long as I'm successful with the options, that gives me a lot of reassurance. I'm not as stressed. It's when I'm losing on the options, which are time sensitive, that it makes it a little bit more complicated. All right, so even though a lot of my SPAC portfolio is down in terms of the positions that I hold, like the shares, we have Tattoo Chef, Sofi, even Play Studios, well, it's just a matter of time before they recover. Now, in the meantime, we're just benefiting and profiting off of the option plays. So I hope you guys enjoyed this video. It's a little bit different from usual, but let me know in the comments what you guys think. And before writing mean comments, think about what you're doing. 100% success rate so far.